Good afternoon and welcome to Biztech's Asian Midday Market Watch. Tina Teng Markets Analyst at CMC Markets APAC and Canada is our guest today, coming out to us from Auckland, New Zealand. Now, Tina, great to have you on the show again today.
Nice to see you, Brian.
Now, before we get your insights, Tina, let's take a look and see how markets in the regions are performing. But we'll start with crypto markets first. Bitcoin is at 22,943.1. It's down 3.74%. Ethereum is at 1,679.98. It's down 0.54%. Now, looking across to regional stock markets, the SGX is up 0.52%. Bursa Malaysia is down 0.36%. Shanghai is down 0.42%. ASX All Ordinaries is down 0.28%. The Nikkei is down 0.7%. The Hang Seng is down 2.02%. And rounding up the numbers, we've got the Kospi, which is down 0.75%. Tina, most of the markets are in negative territory. Tell us why.
So I think the market just now the market participants are being very cautious ahead of U.S. July CPI data. Most analysts predict that this time the CPI would come down from the peak, which was 9.1% in June. And the forecast now is between 8.6 to 8.7%. However, if the data surprise the markets came out higher than expected, then that must be a further pressure on the equity markets. So we can see U.S. markets actually has rebounded since mid of June. That's being supported by the bets, people betting that the Fed would slow down the rate hikes because they see the inflation is going to peak and start coming down. However, if inflation still keep elevating, then the Fed could have to increase the interest rate by another 75 basis points, and they won't slow down. Then the Fed policy is the main driver of the markets. So if the Fed doesn't pivot, then the markets could just retreat from the recent high and go down from here. So this just caution about the markets. Another factor is overnight the Macron cut profit outlook because they see the further the demand softening in the future. So that's to put the pressure on the tech shares. So there's two factors that's help pushing down the markets.
Now, that's on the US markets, but let's take a look then as Chinese market. So consumer price, some data that just came out, Chinese consumer prices rate increased 2.7% in June compared to the same period in 2021. Now, this is the most since July 2020. Tina, tell us about your thoughts on this and also your thoughts around the Chinese economic recovery story.
I think from the current economic data, China is on pace of the fast recovery from the lockdowns back in April and May. However, we can see there's a slow pickup from the lending sector as the Chinese government is trying to stimulate the markets by loosening the monetary policy. So they trying to encourage bank to lend money, provide this liquidity to the markets. However, I think we can see this the investors and the property developers, both of them are not very certain about the current investment, especially around this dynamic zero policy. So we can still it's the demand and the investment are still picking up slowly. It's not really very certain positive outlooks. So that's another factor, I think, just around this whole China recovery story. The Asian markets are not certain, especially the recent Pelosi's visit to Taiwan. That's put further geopolitical tension to this region as well.
Now, speaking of Asian markets, What are your thoughts on this impact then on Asian currency markets, particularly the fact that the Fed rate hikes increases has been ahead of many central banks in Asia?
Yeah. So right now, I think just the kind of like a very crucial pivot time for the markets. If the CPI data comes down in US, probably the market will start pricing in slowing down rate hikes by the Fed. And at the same time, the other Asian markets, central banks actually still on pace of rising rates. So this the difference between the pace of rate hikes. So if the US rate hikes come to a peak, start slowing down, we may see the US dollar continue to soften against other currencies. Otherwise, if the US CPI data came out higher than expected, it's still very elevated inflationary pressure, then we could see the US dollar will retake the strength from here, and the other currencies could come down against the US dollar.
Now, final question, Tina. Your thoughts on the commodity space right now and what we should be looking out for?
What we are looking, I think the crude oil markets and the gold is what I always focus on. They are the bellwether of the commodity markets as well. So for crude oil, the crude oil has come down since July. So this because the futures markets were pricing in economic recession of US and softening demands. However, I think in the physical market, we can see still the supply shortage still there, and the European energy crisis still there. I don't see oil price will just crash in a big way.
Mm-hmm.
It probably will slowly pick up. Now it's around $90 WTI futures, and I don't see it could go lower than 80 or 70, 60, because I know some investors might bet that oil price will come down in a big way, but I don't see that's the current trend. For gold, I see gold is moving against US dollar. So like what just said, if US dollar is from here goes up again, that might put further pressure on the gold price and gold could come down. Otherwise, if US dollar continue to soften against other currencies, you could see the gold price actually start to picking up again. Especially from the chart technical analysis, that's what I'm looking at every day. Gold had a very major bullish breakout last week, but this just from the charts, I think a fundamental factor will be still the main driving of the markets.
Now, Tina, as always, thank you very much for coming on the show and thanks for your insights.
Thank you, Brian.
Now, we've been speaking to Tina Teng, Markets Analyst, CMC Markets, Asia Pacific and Canada on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication platforms on TV, radio, websites, and social media platforms. Please subscribe and like our various platforms. Thank you for tuning in.